Homeownership and taxes, maximizing deductions and benefits. Welcome to our guide on homeownership and taxes, where we'll be exploring the many ways that owning a home can help you save money on your taxes and maximize your financial benefits. Whether you're a first-time homebuyer or a seasoned homeowner, the tax benefits of owning a home can be significant. From deductions for mortgage interest and property taxes, to credits for energy-efficient home improvements and more, there are a wide range of strategies you can use to reduce your tax bill and keep more money in your pocket. But with so many different deductions, credits, and regulations to navigate, it can be difficult to know where to start. That's why we've put together this comprehensive guide to help you understand the most important tax benefits of homeownership, and how you can take advantage of them to achieve your financial goals. So, whether you're looking to buy a home in the near future, or you're already a homeowner and want to make sure you're getting the most out of your tax benefits, you've come to the right place. We'll be covering everything you need to know to maximize your deductions and benefits, and help you save money on your taxes. So sit back, relax, and get ready to learn how homeownership can help you save money and achieve financial success. Let's get started. The first deduction we'll cover is the mortgage interest deduction. This deduction allows homeowners to deduct the interest they pay on their mortgage from their taxable income, reducing their overall tax liability. To claim the mortgage interest deduction, you'll need to itemize your deductions on your tax return using Schedule A. You can generally deduct the interest you pay on your primary residence and one additional home, such as a vacation home. The loan must also be secured by the property, and the total amount of the loan cannot exceed $750,000 for mortgages taken out after December 15, 2017. The amount you can save with this deduction depends on several factors, including your mortgage interest rate, the size of your mortgage, and your tax bracket. However, for many homeowners, the mortgage interest deduction can result in significant tax savings. It's important to note that there are some common misconceptions about the mortgage interest deduction. For example, some people believe that they can deduct the full amount of their mortgage payment, including the principal. However, the deduction only applies to the interest portion of the payment. Additionally, if you're a high-income taxpayer, you may be subject to the alternative minimum tax, which can limit the amount of your mortgage interest deduction. It's always a good idea to consult with a qualified tax professional to determine how much you can save with this deduction. Are you a homeowner looking to save some money on your taxes? Then you'll want to pay close attention to this section on the mortgage interest deduction, one of the most valuable tax benefits available to homeowners. So, what exactly is the mortgage interest deduction? Simply put, it allows homeowners to deduct the interest they pay on their mortgage from their taxable income, reducing their overall tax liability. This deduction is available to most homeowners, as long as they itemize their deductions on their tax return using Schedule A. Now, you might be wondering how much you can save with the mortgage interest deduction. The amount depends on several factors, including your mortgage interest rate, the size of your mortgage, and your tax bracket. However, for many homeowners, the savings can be significant. Let's take an example. Say you have a $300,000 mortgage with a 4% interest rate. In your first year of payments, you'll pay around $12,000 in interest. If you're in the 22% tax bracket, the mortgage interest deduction can save you around $2,640 in taxes that year. That's money you can put towards other expenses, like home improvements, college savings, or a much-needed vacation. But there are some important things to keep in mind when claiming the mortgage interest deduction. First, the loan must be secured by the property, and the total amount of the loan cannot exceed $750,000 for mortgages taken out after December 15, 2017. Second, the deduction only applies to the interest portion of your mortgage payment, not the principal. And third, if you're a high-income taxpayer, you may be subject to the alternative minimum tax, which can limit the amount of your deduction. Still, the mortgage interest deduction remains a valuable benefit for many homeowners, helping to reduce their tax liability and make homeownership more affordable. So, if you're a homeowner, don't miss out on this opportunity to save some money on your taxes. Consult with a qualified tax professional to determine how much you can save with this deduction, and make sure to claim it on your next tax return. As a homeowner, you're responsible for paying property taxes on your home. But did you know that you may be able to deduct those taxes from your taxable income? That's right, the property tax deduction is another valuable benefit available to homeowners, and it can help you save money on your taxes. So, how does the property tax deduction work? Essentially, it allows homeowners to deduct the amount they pay in property taxes from their taxable income, reducing their overall tax liability. This deduction is available to most homeowners who itemize their deductions on their tax return using Schedule A. The amount you can deduct depends on several factors, including your property tax rate, the assessed value of your home, and your tax bracket. But for many homeowners, the savings can be substantial. Let's take an example. Say you own a home with an assessed value of $400,000, and your property tax rate is 1.5%. That means you'll pay around $6,000 in property taxes each year. If you're in the 22% tax bracket, the property tax deduction can save you around $1,320 in taxes that year. That's money you can use to pay down your mortgage, invest in your home, or save for the future. But there are a few things to keep in mind when claiming the property tax deduction. First, the deduction only applies to the taxes you pay on your primary residence or a second home. You can't deduct taxes on rental or investment properties. Second, if you're subject to the AMT, the deduction may be limited. And third, some states and localities have caps on the amount of property taxes that can be deducted. Still, the property tax deduction is a valuable benefit for many homeowners, helping to reduce their tax liability and make homeownership more affordable. So, if you're a homeowner, make sure to claim this deduction on your next tax return. Consult with a qualified tax professional to determine how much you can save, and use those savings to achieve your financial goals. If you work from home, either as a freelancer or as a remote employee for a big company, you may be eligible for the home office deduction. This deduction allows you to deduct certain expenses associated with your home office from your taxable income, reducing your overall tax liability. So, what expenses can you deduct? The home office deduction covers a portion of your mortgage interest, property taxes, utilities, and other expenses related to maintaining a home office. To be eligible, your home office must be used regularly and exclusively for business purposes, and it must be your principal place of business. But here's the catch: if you're a full-time remote employee for a big company, the home office deduction may not be applicable to you. That's because, in order to claim the deduction, your home office must be for the convenience of your employer. In other words, if you're working from home by choice, rather than because your employer requires it, you may not be able to claim the home office deduction. That said, there are some situations in which you may still be eligible for the deduction. For example, if you're self-employed and work from home, you can claim the home office deduction as long as you meet the eligibility requirements. And if your employer requires you to work from home due to COVID-19 or another qualifying reason, you may also be eligible for the deduction. If you do qualify for the home office deduction, it can be a valuable way to save money on your taxes. However, it's important to follow the rules carefully and keep accurate records of your home office expenses. Consult with a qualified tax professional to determine whether you're eligible for the deduction, and make sure to claim it on your next tax return if you are thinking about making some energy-efficient home improvements. If so, you may be eligible for a tax credit that can help you offset the cost of those upgrades. The energy-efficient home improvement tax credit is available to homeowners who make certain energy-efficient upgrades to their homes. So, what improvements qualify for the tax credit? There are many different types of upgrades that may be eligible, including 1. Installing new windows and doors that meet Energy Star standards. 2. Adding insulation to your attic, walls, or floors. 3. Replacing your old heating and cooling system with a new, energy-efficient model. 4. Installing a solar panel system or other renewable energy technology. 5. Upgrading your water heater or furnace to a more efficient model. 6. Adding a new roof that meets Energy Star standards. 7. Installing a geothermal heat pump or other energy-efficient heating and cooling system. These are just a few examples of the types of improvements that may qualify for the energy-efficient home improvement tax credit. The specific amount of the credit will vary depending on the type of improvement and the cost of the project, but it can be up to 30% of the cost of the upgrade, with a maximum credit of $1,500. To claim the credit, you'll need to file Form 5695 with your tax return and provide documentation of the energy-efficient improvements you made. Keep in mind that not all upgrades are eligible for the credit, and the credit is set to expire at the end of 2023, so it's important to act soon if you want to take advantage of this benefit. Overall, making energy-efficient upgrades to your home is a smart investment that can help you save money on your energy bills and reduce your carbon footprint. And with the energy-efficient home improvement tax credit, you can make those upgrades even more affordable. So, if you're planning to make energy-efficient improvements to your home, make sure to consult with a qualified tax professional to see if you're eligible for this valuable tax credit. Are you thinking about selling your home? It's a big decision that can come with some significant tax benefits. When you sell your primary residence, you may be eligible for a tax exclusion that can help you keep more money in your pocket. Under current tax laws, if you've owned and lived in your home for at least 2 of the 5 years before you sell it, you can exclude up to $250,000 of the capital gain from your taxable income if you're single, or up to $500,000 if you're married filing jointly. That means that if you sell your home for a profit of $250,000 or less, you won't owe any federal income tax on the gain. But what if you sell your home for more than that amount? In that case, you'll owe capital gains tax on the portion of the gain that exceeds the exclusion. However, you may still be able to minimize your tax liability by keeping track of any home improvements you make while you own the home. Home improvements can help increase your basis in the home, which can in turn reduce the amount of the gain that's subject to tax. For example, if you bought your home for $300,000 and made $50,000 in improvements over the years, your basis in the home would be $350,000. If you sell the home for $600,000, your gain would be $250,000, and you could exclude the entire amount from your taxable income. Selling your home can be a complex process, and it's important to work with a qualified real estate agent and tax professional to make sure you're taking advantage of all the tax benefits available to you. But with the potential for significant tax savings, selling your home can also be a smart financial move that can help you achieve your long-term goals. So, if you're considering selling your home, make sure to do your research and consult with experts to maximize your tax benefits and ensure a successful sale. Congratulations, you made it to the end of our guide to maximizing your tax benefits as a homeowner. We've covered a lot of ground today, from the mortgage interest deduction to energy-efficient home improvements and everything in between. As you can see, owning a home comes with a wide range of tax benefits that can help you save money and achieve your financial goals. But it's important to stay up to date on the latest tax laws and regulations, and to work with a qualified tax professional to ensure you're taking advantage of all the deductions and credits available to you. Whether you're a first-time homebuyer or a seasoned homeowner, there are always new opportunities to maximize your tax benefits and keep more money in your pocket. So don't be afraid to ask questions, do your research, and explore new ways to save on your taxes. Thank you for joining us today, and we hope this guide has been helpful in your journey to homeownership and financial success. Don't forget to like and subscribe to our channel for more tips and advice on personal finance, taxes, and more. This video that was authored by OpenAI ChatGPT. With the company taking on billions of dollars in investments, this is the perfect time to find out ways for this innovative tool to help you learn about personal finance. Audio for this video was provided by NaturalSoft Limited's Natural Reader AI software using their commercial license. Per their website, this license allows you to use its software and voices for commercial or public use. This includes, but is not limited to, YouTube videos, public announcements, broadcasts, and e-learning.